Hello everyone, welcome to my channel Accounts Global. Students, in this lecture I am going to discuss revenue recognition concept. And believe me, this is one of the best accounting principles. Students, before I explain this, I want to tell you every business organization is established for the purpose of earning profit, for the purpose of increasing revenue, because when revenue increase, that results into increase in profits of the business. That is the very much purpose of every business. And basis that, we are going to explain this revenue recognition concept. This concept guides us that when the revenue should be recognized in the business organization for the purpose of its recording in books of accounts. I repeat it, students, listen it properly and try to understand. Whenever any item of revenue, transaction of revenue takes place, we need to recognize it first of all. Either it belongs to the current accounting period or it belongs to the next year. And accordingly, it provides us base for recording in the books of accounts. I tell you, there are two sources of revenue generation, friends. The first one is sales. Whether it is manufacturing organization or a trading house, trading organization, they all emphasize on increasing into sales because the goods are processed, the goods are purchased for converting them into sales. Whenever any sales transaction take place, firstly, we recognize it. Yes, this is a financial transaction. This is a revenue item. And then we decide whether it should be recorded in the books of accounts or not. What is this? I explain you with the help of an example. You must know, the students, that there is an accounting period which begins on 1st April and ends on 31st March of every year. The accounting period begins on 1st April and ends on 31st March next year. So, keep in mind the sale of goods. I tell you, whenever sale of goods is made, I mean to say, whenever goods are sold either for cash or on credit, I tell you, either it is cash sales or credit sales, doesn't matter, that is immediately recognized as revenue of the business and immediately recorded in the books of accounts. You need to understand this. Whenever cash sale is made, we know that we offer the goods and we get the cash in return. That is understood. What about credit sales? We made the sale in the current year, for example before 31st March, but amount of that sale is likely to receive in the next accounting year. Hardly matter, that will be considered as the revenue of that current year itself. For example, if sales made on 31st March on credit basis, it simply means amount will be received in the next accounting period, but this sale will result into revenue of the business and that will be recorded on 31st March itself, and it will increase the profit of the current year itself. This is revenue recognition principle. This is a revenue recognition or realization concept. It means sale whenever is made either on cash or credit is immediately recorded into the books of accounts irrespective of the fact when the amount will be received. This is revenue recognition and realization concept. So this is the one aspect I told you regarding the sales. Sale is immediately recorded. What about the other revenues item, other revenue item? You need to understand these items also. Other revenue items. For example, interest, commission and rent. I am talking about interest received, commission received, rent received. These are also our revenue items. Remember one thing, students, these are recognized and recorded in the books of accounts on time basis. On time basis only. What is this time basis? For example, in interest and commission for the month of March earned but not yet received, that is called accrued income. Try to understand this, students. That is called accrued income. I tell you again, commission earned for the month of March. It means earned means we are entitled to claim that commission. But amount of that commission not yet received, that will be received in the next accounting period. This is termed as accrued commission or accrued income. Remember one thing, I told you it is based on time. So that will be considered as the revenue of March, not of April, when the amount will actually be received. Same is the matter of unearned income. See, there is a term unearned income. Students, what is this unearned income? I tell you, if rent for the month of next year, April, I mean next month, April, received in the month of March itself. I repeat, if rent for the month of April received in the month of March itself, that is rent received in advance, that cannot be treated the revenue of the current year. No doubt it has been received, but we will work for it in the next accounting year, in the next month. So it will be recorded in the next accounting period, and that cannot be considered as a part of current year revenue. This is what? This is all about revenue recognition concept. So firstly, I told you about the sales. Secondly, the our other revenue items. Listen the other revenue items once again. These are time basis. The revenues items, these interest, commission, rent, etc., which accrue from 1st April to 31st March are considered and recognized as our revenue, irrespective of the fact when the amount is received. What is the importance of revenue recognition concept? It helps us to calculate the true profits of the business and help us to understand and ascertain the correct and true financial position of the business. So this is the importance of revenue recognition concept, and I believe the concept of this revenue recognition and realization concept is completely clear to you. Stay connected, improve your knowledge, share the video with your friends and classmates, subscribe the channel if not yet subscribed. And one more thing important, if you want to understand the same video in Hindi, then visit my another channel, that is Commerce with Difference.